Hello and welcome back to our weekly mortgage rate segment. I'm Megan Abdelaziz, realestatesiny.com's mortgage reporter. The mortgage rates continued on their upward trend again this week. The 30-year fixed rate rose to 3.74%. The 15-year fixed rate rose to 2.97%, and the 5-year adjustable rate rose to 2.70%. The rates only increased slightly due to the push and pull of the economic news that was released this week. Like last week, we took a look at Gallup.com's report on U.S. economic confidence that was released on May 21st to see if and how Americans' views on the economy had changed. In this week's report, they not only updated their economic confidence index, but also put in two polls, one on the net ratings of economic outlook in the U.S. and the other on the net ratings of current economic conditions in the U.S. Gallup's Economic Confidence Index was at a weekly average of -5 for last week, which is an improvement from the previous week when it was at -11, and an even bigger improvement from the beginning of the year when it was at -22. As we can see, when the mortgage rates started to rise during the second week of May, so did Gallup's Economic Confidence Index, showing us that Americans' confidence in the economy plays a role in what happens with the mortgage rates. The poll on the net ratings of economic outlook in the U.S. came in with 49% of Americans feeling that the economy is getting better and 47% of Americans feeling that it is getting worse. These results gave Gallup a weekly average of 2 for last week, up from the -6 it was at the previous week. The last poll on the net ratings of current economic conditions had more of a negative outlook, but not enough to sway the economic confidence overall. The net ratings of current economic conditions poll showed that 32% of Americans feel that the economic conditions are poor, and 20% of Americans feel that the economic conditions are good. This gave Gallup a weekly average of -12 for the net ratings of current economic conditions for last week. On Wednesday, May 22nd, the Federal Reserve Chairman Ben Bernanke spoke with Congress about the quantitative easing program. When he started speaking about the program and the possibility of cutting the program back in a couple of months, but not completely ending it until there is better economic data, investors dived back into the stock markets. The stock markets continued to rise through the week, but when Ben Bernanke was speaking with Congress, the Dow Jones shot up to over 15,500, and the S&P 500 shot up to over 1,680. As soon as the minutes from the Federal Open Market Committee's meeting at the end of April were released later that day, however, investors pulled back from investing as much into the stock markets. By the end of Wednesday, the Dow Jones closed at about 15,300, and the S&P 500 closed at about 1,650, which are still high numbers for them. If the minutes from the Federal Open Market Committee meeting weren't released, the mortgage rates probably would have climbed even higher than they actually did. Lastly, that same Wednesday, the National Association of Realtors released their April existing home sales report. This report showed us that the housing market is still continuing to rise with each passing month. There was a national total of 4.97 million existing homes that sold in April, which is an increase of 0.6% from March and an increase of 9.7% from last April. The national total amount of existing homes that were up for sale by the end of April was at 2.16 million, which is an 11.9% increase from March. Mortgage rates have continued to increase each week, along with the increasing confidence in the economy. If you are a homeowner and have a high rate on your current mortgage, refinancing might be a good thing to look into now, since the rates are much lower than they were a few years ago and are still near record lows. Make sure you check out our mortgage blog each week on trendingsiny.com to keep up with the mortgage rates for the coming weeks, as the rates have been increasing but are still volatile. Thank you for watching, and be sure to like us on Facebook, follow us on Twitter, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with realestatesiny.com.